Hi folks, this is Lee with the Market Sense for the week of January 29th, 2019. The charts in this presentation come from the Trade Navigator software that is provided to us by Gettess Financial Technologies. And this is a weekly bond market chart. And you can see after this big week up, they started back down, and I have to admit, I'm sort of impressed with them. This week here did close below everything, but it wasn't large. In fact, it was smaller than the previous week. And then the next week closed inside of that week. Now, that's just consolidation. That's not directional at all. And that's kind of impressive because I would have thought they could have been a lot lower down here to the mid-Keltner or even further and still looked pretty good in that case. But holding this high is rather impressive, although again, doesn't really tell us direction. What will tell us direction is how they go out of this pattern. I don't believe there's any way to predict it. I think you just look for breakouts, and once they go one way or the other, you've got like a 80% chance that that's really what they're doing. They still have false breakouts, of course. But what we're looking at here is a move up here above 146.20 or below 144.08, and it might be wise to take that all the way down to 134.24 for this week. So above 146.20 or below 143.24, other than that, nothing means anything. And that's kind of a good way to go into this week because this is, well, it's a nasty week. We've got the FOMC meeting Tuesday and Wednesday, and then we've got a slew of employment data starting Wednesday and Thursday and culminating with the monthly report on Friday. Having all that stuff together, that's something that has a technical term that describes it, and it's called yuck. Ooh, yuck. No way to know what that's going to do, so being in breakout mode is probably just as well. So again, above 146.20, below 143.24. Other than that, I really don't care. I don't think it's predictable. Stocks almost look like a mirror image of bonds. After their breakdown, they've rallied back nicely, and last week was inside of the previous, and so far this week has stayed inside of that. So we really have a very similar situation here, breakout mode. We're looking for them either to go above 26.90 or down here below 25.65. And until they do either of those things, I really don't think there's anything you can do to determine probable direction. And as mentioned before, Fed meeting, employment data, monthly report on Friday. What do we call that again? Yuck. That's what we call that. Yuck. So looking for breakouts is it. There's nothing predictive. There's nothing clever we can do. And we have absolutely no guarantee that we will get a breakout, although that employment report on Friday in particular has been known to be a pretty good motivator. So that's what we've got for you today. I hope you can find something profitable to get you